If at some point, and who knows, maybe these halts are a bit of a foreshadowing of that kind of thing happening. But if you get some big futures holder that says, I'm standing for delivery, and the exchange can't meet that delivery and says, you know what, sorry, force majeure, this is too much for us, we're going to deliver you in cash instead. And they say, no, I don't want the cash, I need the silver. That's when, all breaks loose. And exactly. And then that's a reset. And we're starting to see places like India, for example, that are saying, we're no longer going to price our silver based on the LBMA spot prices. We're going to do our own. They just feel that what is being determined in the West is no longer fair or realistic, and they've decided to move away from it. And I think that could potentially start to make Western pricing just not relevant anymore.
Yeah. According to silver analyst Peter Krauth, the global silver market could face a dramatic shift if large futures holders demand physical delivery that exchanges cannot fulfill. In such a scenario, exchanges might attempt cash settlement instead of delivering real silver, potentially triggering a crisis of confidence in paper markets. If investors refuse cash and insist on physical metal, it could spark a major reset in silver pricing. Meanwhile, countries like India are already moving away from Western benchmarks such as London Bullion Market Association pricing, signaling growing skepticism toward traditional price discovery systems and strengthening the case for higher silver prices. Now, we present the clips from Peter Krauth's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We've gone through what I believe is the stealth phase. That chart that you're talking about is a generic chart that talks about bull markets for any asset. It's going to be different for every asset. It's going to be different for every bull market in a given asset. But I think we've been through that stealth phase. We're at the beginning, I think, of the awareness phase. And what we had, I think, in January, that dramatic parabolic run up to $120, and then that big correction within a matter of days, a week or so, to intraday $67, then quickly to 70, and then trading in a range 70 to 80. If you look at that chart, that bull market chart, there's something called a bear trap. And the bear trap is, I think, applies especially to investors who have come in really late in the run-up. Might have been people buying at $90, $100, $110, see it go to 120 and then to 70 almost overnight, and will sell because they're going to feel, oh, shoot, I've lost all this money. They're going to take their hit. They're going to get out and they're going to think, that's it. It's a bear market. It's never coming back. And that's the bear trap in the bull market, because these people don't understand the fundamentals of the market, and they decide that they sell, they never come back, and yet the market continues to climb. And I've been surprised, when it hit that $70 mark, I thought we were going to be in a consolidating range of 70 to 80 for about a couple of months at least. We're already above 90. We've been above 93, 94 in the last few days, pulled back a little bit, but I think we're going to continue to see this climb continue. Hopefully less volatile, but I think this year will continue to bring a fair bit of volatility. I think there are a few reasons that may be. One of them is that there's concern that this will sort of slow down the economy globally a little bit. People are concerned about recession. Silver does underperform gold in a recession. Interestingly enough, it outperforms gold as you exit recession. We've seen that. In Gold We Trust has done some fantastic work on that, and it outperforms early, underperforms in the middle, and then outperforms as you exit recession. The other aspect of it is that bit of a counter argument is that there's a lot of silver in military applications, and global spending on military is at all-time highs. If we enter some kind of a more involved conflict, that's a lot of military expenditure and use of military equipment, and if a lot of that has to be replaced, that's going to require more silver. So we're
seeing the Tomahawks in the air today.
That's exactly right, and they carry a fair bit of silver. If at some point, and who knows, maybe these halts are a bit of a foreshadowing of that kind of thing happening. But if you get some big futures holder that says, I'm standing for delivery, and the exchange can't meet that delivery and says, you know what, sorry, force majeure, this is too much for us, we're going to deliver you in cash instead. And they say, no, I don't want the cash, I need the silver. That's when, all breaks loose. And exactly. And then that's a reset. And we're starting to see places like India, for example, that are saying, we're no longer going to price our silver based on the LBMA spot prices. We're going to do our own. They just feel that what is being determined in the West is no longer fair or realistic, and they've decided to move away from it. And I think that could potentially start to make Western pricing just not relevant.
The silver market may be transitioning from the stealth phase into the early awareness phase of a powerful bull market. After a sharp rally toward $120 followed by a rapid correction near $70, many late investors were caught in what analysts call a bear trap, selling during volatility while the broader uptrend remains intact. Despite the pullback, silver quickly recovered above $90, signaling strong underlying demand. Rising global military spending and industrial usage could further boost consumption. Meanwhile, countries like India are questioning Western pricing benchmarks set by the London Bullion Market Association, raising the possibility of a major shift in global silver price discovery. Let's get back to the interview.
As of April 1st, they are allowed to start using silver as collateral for loans. So that brings silver into mainstream. Gold has always been available to use as collateral for bank loans and so on. And then, as you mentioned, in the last about 7 or 8 months, their holdings in ETFs in India have exploded by over 320%. So, and they've only been around for a few years. So another sort of interesting anecdote, not just in India, but places like Turkey, Egypt, that are very big gold buyers traditionally for cultural reasons, for, family events, that kind of thing. Gold has gotten so expensive for them that they're now shifting to gold-plated silver. So that could push up silver demand. You're getting the same look in the product, and yet you're consuming more silver so that you get a similar look at a lower price. With insiders of the industry in the last few days, and it's really not that obvious or easy or quick to start substituting. Almost all of silver's applications, by the way, silver after oil is the commodity with the most variety of applications worldwide. It's something like 10,000 different applications. And so it's very difficult to substitute in a lot of those. Silver is, in most cases, industrially used in such small quantities and has almost no effect on the final price. So either you have the manufacturer of that product absorb the additional cost of the silver, or they pass it on, and it really has little effect on the final price. So yeah, it's really set to be there. It's true that silver is one of the biggest manufacturing costs in a solar panel. So as the silver price goes higher, obviously it gets more expensive to manufacture solar panels. But solar is still one of if not the cheapest form of new energy that utilities add, for example. And for, let's say, data centers, they're growing incredibly. It's mostly in the US. That's where the largest proportion of data centers are. And they initially, at least some of the Mag 7 turned to nuclear. And I started saying, well, the next logical place is to go to solar. And I've gotten some pushback on that because it's not considered baseload power. They need steady 24-hour power. I believe that batteries are becoming a game changer in that sector because the cost of batteries for solar is falling by about half over the next 10 years. And we've seen that in 2025, they've already installed 60% of 2023's solar capacity met by battery. So there was some really interesting work by Rystad Energy. It's a group out of Norway, I believe. And they showed that the growth of solar panel installations over the next 10 years is about 3% on average per year. Maybe not quite the pace of what we've seen in the last few years, and this is on a global basis, but battery installations to support solar. So just so that we're clear, solar is daytime power. Yeah. So what do you do at night, right? So if you have batteries that can store some of that daytime power, there's your answer. Nighttime comes, you start drawing down the power from the battery, stored in the battery, and you've got your 24-hour cycle of power. Very reliable, right? No moving parts. And the growth of batteries for solar is at 12% over the next 10 years. So batteries really are catching up to solar installations, and I believe, again, a game changer, making solar the new sort of cheapest form of baseload power. So it's going to take a lot. It's really going to take a lot in terms of sustained high silver prices to sort of kill that bull side of the market.
Silver is rapidly moving into the financial mainstream as new policies allow it to be used as collateral for loans in markets like India. At the same time, silver investment demand is exploding, with silver ETF holdings in the country rising more than 320% in recent months. In regions such as Turkey and Egypt, rising gold prices are pushing consumers toward gold-plated silver jewelry, increasing silver consumption. Industrial demand remains strong as well, especially in solar panels and battery storage systems powering data centers. With more than 10,000 industrial applications and limited substitution options, analysts believe sustained demand could support a powerful, long-term silver bull market. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.